Welcome to ZICA Academy YouTube channel. In this lecture, I want to examine activity-based costing, ABC, using question number 2 of ICAN November 2024 Performance Management as work example. Please, your like and comment will help this video reach a number of people. So, what do we mean by activity-based costing? Activity-based costing is a method of charging overheads to cost unit on the basis of benefits received from the particular indirect activities. The method of charging overheads to cost units on the basis of benefits received from the particular indirect activity. So, when you charge cost to a product on the basis of their cost drivers, that method is called ABC, activity-based costing. Traditional absorption costing uses either labor hours or machine hours to charge overheads to products. So, traditional method use either direct labor or machine hours to charge overheads to a product. But ABC uses many cost drivers to absorb overheads to product. So, using traditional method to compute overheads absorption rate equal to budgeted overheads over budgeted level of activity. Budgeted level of activity. The level of activity could be level of activity, could be direct labor or machine hours. Direct labor hours or machine hours. So, under the traditional method. But activity-based costing, as I've said, uses many cost drivers. So, when we say cost drivers are factors which cause a change in the cost of activities. Factors that cause a change in the cost of activities are said to be cost drivers. Selection of cost drivers. So, to select cost driver, we have cost pool. We have suggested cost drivers. Suggested cost drivers. So, we have the cost pool could be ordering cost. The possible cost driver is number of orders. So, 2, we have setup cost. The cost drivers for that is number of setup. Then, cost pool, we can have material handling cost. The possible cost drivers for that is number of production runs or number of material movement. Number of production runs or number of materials movement. Then number 4, we have material procurement. Then the cost driver for that is number of orders. others. Number 5, we could have inspection cost. Inspection cost. That is number of inspection or inspection hours. Number of inspections or inspection hours. Number 6, we could have maintenance, which is number of maintenance hour. Maintenance, which is number of maintenance hours. Number of maintenance hours. Number 7, we could have production scheduling. Production scheduling. Production scheduling. The possible cost driver for that is number of production runs. Number of production runs. Number 8, we have dispatching cost. Dispatching cost. The possible cost driver is number of dispatches. Number 9, we have quality control cost. Quality control cost. Quality control cost. Quality control cost is number of inspection. Number of inspections. Number 10, we have customer order processing. Customer order processing cost. Customer order processing cost is number of orders or number of customers or number of customers visit. Number of orders or number of customers or number of customers visit. Number of customers visit. Number 11, we have raw material inventory handling. Raw material inventory handling. Raw material inventory handling. Number of purchase order delivered. Number of purchase order delivered. Number 12, machinery. Machinery, which include power, machine power, depreciation of machinery, etc. So the possible cost driver is number of machine hours. Number of machine hours. Number of machine hours. These are the cost pool and their suggested cost drivers. Steps for solving practical questions on ABC, activity-based costing. Step number 1, identify the activities. Identify the activities. Step 2, identify their possible cost drivers. That is, you identify the cost drivers that can be attributed to the activities you have identified. Step 3, calculate the cost drivers rate. Just you want to calculate cost drivers rate. Cost drivers rate equals to activity-based cost divided by the activity divided by the cost drivers. This will give you the cost drivers rate. So, having examined the steps to use in solving practical questions involving activity-based costing, let's take ICAN November 2024 question number 2 as work example. Keep watching. ICAN November 2024 question number 2. OKKDEM Nigeria Limited is considering the use of activity-based costing ABC approach in its overheads recovery. The company manufactures 2 products known as AFAM and BETAM. Details of production for the 2 products are given below. We have for AFAM and BETAM. Annual production in units 120,000. 120,000 for each of AFAM and BETAM. Direct labor hours. Direct labor time per unit in hours 20 for AFAM, 25 for BETAM. Direct labor time per unit in hours 20 for AFAM, 25 for BETAM. Number of special parts per unit 10 for AFAM, 40 for BETAM. Number of sets ups per unit per batch. Number of sets ups per batch 10 for AFAM, 30 for BETAM. Number of sales invoices issued per year 500 for AFAM, 2,400 for BETAM. Number of separate materials issued per batch 10 for AFAM, 10 for BETAM. Batch size units 10,000 for AFAM and 50 for BETAM. The analysis of the overhead costs provided the following information. We have serial number, overhead cost, analysis, amount, and cost driver. Number 1, setup cost 2,928,000. The cost driver is number of setups. 2, special part handling cost 2.4 million. And the cost driver is number of special parts. 3, customer invoicing cost 1,160,000. The possible cost driver is number of invoices. 4, material handling cost 2,520,000. The possible cost driver is number of batches. Number 5, other overheads 4,320,000. The possible cost driver is labor hour. Required. A1. Use the traditional approach to determine the direct labor hourly rate for the company. 2. Use the direct labor hourly rate to compute the overhead rate attributable to a unit of AFAM and BETAM products. B1. Determine the cost driver rate using the ABC approach. B2. Compute the overhead rate per unit of each product using the ABC approach. C. If the unit material and labor costs for the products are as shown below, determine their unit selling prices where the company adheres to a policy of 20%. Profit margin using the two overhead absorption method. You are given material cost, you have the labor cost. Affirm 400 naira for material cost and the labor cost for Affirm is 100 naira. Better, the material cost is 500 naira while the labor cost is 125 naira. Let's have the solution to the question. A1. Using the traditional approach to determine the direct labor hourly rate for the company. I've told you that to use traditional approach using labor hour, so the overhead absorption rate will be budgeted overhead divided by budgeted level of activity. Now, traditional approach. A1. Labor, let's say overhead absorption rate. Overhead absorption rate. The formula is budgeted overheads. Budgeted overheads. Since you have to use labor hour, since you have to use direct labor hourly rate. So that means you have over budgeted direct labor hour. Budgeted direct labor hour. How much is now the budgeted overheads? Budgeted overheads comprises, the first item we have setup cost, 2,928,000. Set up cost, 2,928,000. The second item is special part handling cost, 2.4 million. Special part handling cost, 2.4 million. 2,400,000. Number 3 is customer invoicing cost, 1,160,000. Customer invoicing cost. Customer invoicing cost, 1,160,000. The next item is material handling cost, 2,520,000. Material handling cost, 2,520,000. Then number 5, we have other overheads, 4,320,000. Other overheads, 4,320,000. You now sum up everything in order to get the budgeted overheads. 2,928,000 plus 2.4 million plus 1,160,000 plus 2,520,000 plus 4,320,000. So it is total 13,328,000. 328,000. 13,328,000. That is the budgeted overhead. We've gotten the numerator. We are left with the denominator. And the denominator is budgeted direct labor hour. Then we need the budgeted direct labor hours. Budgeted direct labor hours. Remember, we have for two products, AFAM and BETAM. You are given direct labor time per unit in hours. For AFAM, we have 20 hours. For BETAM is 25 hours. It is given in per unit. That means you will need to multiply it with annual production. Annual production for each of the products, AFAM and BETAM, is 120,000. So, and the labor hours for AFAM is 20 hours, and that of BETAM is 25 hours. So we have 20 times 120,000, 25 times 120,000. That will give you the budgeted direct labor hours. Annual production for each of the products is 120,000 units. The hours, each of the product, 120,000 units, times, for AFAM is 20 hours, for BETAM is 25 hours. So you multiply. So that will give you the budgeted direct labor hours. So 120,000 times 20. So that gives us 2.4 million hours. 2.4 million. For BETAM, 120,000 times 25. That gives us 3 million. For BETAM, we have 3 million. 2.4 million plus 3 million. That will give us 5.4 million. 5.4 million. So that is the budgeted direct labor hours. Budgeted direct labor hours. Remember, the formula for overhead absorption rate is budgeted overheads over budgeted direct labor hour. Overhead absorption rate is abbreviated as OAR. So our OAR now, OAR, overhead absorption rate, which is budgeted overheads, and we've gotten 13,328,000 for budgeted overheads, and budgeted direct labor hour is 5.4 million. 13,328,000 as calculated above. That is our budgeted overheads over budgeted direct labor hour, which is 5.4 million as calculated. 13,328,000 divided by 5.4 million. That gives us 2.47 naira. 2.47, 2 naira 47 kobo per direct labor hour. So, in requirement A1, you have to use traditional approach to determine the direct labor hourly rate for the company. So, direct labor hourly rate for the company is 2 naira 47 kobo. So, A2, use the direct labor hourly rate to compute the overhead rate attributable to a unit of AFAM and BETAM products. So, we have use the labor hourly rate to compute the overhead rate attributable to a unit of each product. No two products are involved. We have AFAM. We also have BETAM. The labor hourly rate is 2.47, 2 naira 47 kobo per direct labor hour. The direct labor hour for a unit of a farm is 20 hours, as given in the question. 20 hours times 20. Then for Betam, labor hourly rate is 2.47 times the hourly rate. The hours required for a unit of Betam is given to be 25 hours in the question, times 25 hours. So 2.47 times 20, that gives us 49 naira 40 kobo approximately. For Betam, 2.47 times 25 hours, that is approximately equals to 61 naira 75 kobo. That is the solution to A2. Then B1, determine the cost driver rate using the ABC approach. Remember, I've told you to determine the cost driver rate using ABC, divide the activity cost by their possible cost drivers. You have been given the cost drivers to use for setup cost. The cost drivers is number of setups. Then for special part handling cost, you have to use number of special parts. Then for customer invoicing cost, you have to use number of invoices. Then material handling cost, you have to use number of batches. Then other overheads, you have to use labor hours. We have determined the labor hours earlier in the part 1 or in A1 of the question. So you don't need to repeat that here. So, but you will need number of setup, then number of special parts, number of invoices, and number of batches. Now let's determine that. Among the 4 cost drivers identified, we said we will need the number of setup. So number of setup is given as number of setup per batch. It is per batch. That means you will need to multiply by number of batches for each of the products. So, and the batch size units is given to be 10,000 or 50 for a farm and Betam respectively. But this is the batch size. That is, for a batch, you need 10,000 units of a farm. For Betam, what constitutes a batch? One batch of Betam is 50 units. Then to achieve 120,000 units of each product, you will need the number of batches. Remember, I've told you that I am of the view that this is supposed to be 500, but I will use the 50 given in the question. I will also tell you what the possible result should be if this were 500. Now, what is the number of batches? So, number of batches. Calculation of number of batches. Remember, 2 products are involved. Let me have this as working 1. We have a farm and we have Betam. Remember, 120,000 units of each of the 2 products were achieved. And what constitutes one batch of a farm is 10,000 units. How many batches would 120,000 units be? So you have 120,000 units divided by 10,000 units. Since 10,000 units make up a batch of a farm. So this will give us 12 batches. The number of batches of a farm are 12. For Betam, 50 constitute a batch. And to achieve 120,000 units of Betam, you have 120,000 divided by 50. That will give you 2,400 batches. I've told you that I am of the view that this is supposed to be 500. If it were 500, this result would have been 240 batches. 240 batches. Now that we have determined the number of batches and we are in need of number of setup. So number of setup per batch, we have 10 and 30. So number of setup now, number of set up for a farm now, a farm and betam. For a farm now, the number of setup will be, since we are given number of setup per batch, it will be 10 times number of batches, and this will be 30 times number of batches. So 10 times number of batches, which is 12 for a farm, that will give you 120 sets ups. For betam, it will be 30 times 2,400. That will be 30 times 2,400. That gives us 72,000 setup. 72,000 sets up. This would have been 7,200 if these were 500. It would have been 7,200 instead of 72,000. So total number of setup now. Total number of set up. 72,000 plus 120. That will be 72,120 sets ups. It would have been 7,200 plus 120, which is 7,320. If this were 50, this would have been 7,320 sets up. But I'm working based on the 50 you have in the question. So because I want to give you as an assignment, I want you to change this figure to 50 and resolve the entire solution and compare. I'm already telling you what you will obtain as an answer if this were 500. So go and redo it on your own and change this 50 to 500 and tell me what you have. So I'm already telling you what the solution will have been if you have changed this to 500. Please do that. So that is total number of set up 120. Then the second cost drivers, because we need cost driver for special part handling cost, and that is number of special parts. And what is the number of special parts? Number of special parts is given on per unit. Since it is per unit, then you will need to multiply by the annual production. So number of special parts, working 2, number of special parts. So we have a farm and betam. The unit produced is 120,000 for each of the two. 120,000 times. Since number of special parts is given per unit, that is why we are multiplying it by units. 10 times 120,000, 30 times 120,000. So this is times 10, this is times 30. So this gives us 1.2 million. $120,000 times 30. This gives us 3.6 million. 3.6 million plus 1.2 million. That is total 4.8 million. 4.8 million. You also need cost drivers for customer invoicing cost, and which is given to be number of invoices. And what is the number of invoices? Number of sales invoices issued per year, and that is given in the question. Let me have that as working number 3. Number of invoices. We have a farm. We also have Betam. Number of invoices, number of sales invoices issued per year, 500 and total of 400. 500 for a farm and 2,400, and that is totaled 2,900. So this is the number of invoices. Then we also need the cost driver for material handling cost, and you have to use number of batches, and that have been determined earlier. We got the number of batches by dividing the actual annual production by the batch size, and that is what gave us the number of batches. So to determine cost driver rate, cost, that is B2 and B1 rather, cost driver rate equal to activity cost or activity based cost divided by budgeted activity. So the first activity based cost is setup cost. So we want to compute cost driver rate for setup cost. Overheads relating to number 1, set up cost. We say setup cost, you take the setup cost 2,928,000. 2,928,000 divided by number of setup, since we have to use number of setup as the cost driver for that. So number 2, those one is relating to special part handling cost. Special part handling cost, which is 2.4 million divided by number of special parts. The third one is customer invoicing cost. Customer invoicing cost, which will be 1,160,000. 1,160,000 divided by number of invoices. The number 4 is material handling cost. Material handling cost, which is 2,520,000. 2,520,000 divided by, you have to use number of batches. And the 5th one is other overheads. Other overheads, and that amounted to 4,320,000. 4,320,000 divided by, you have to use labor hours for other overheads. Number 1 is setup cost. And the cost driver is number of setup. Calculation, this is number of batches. This is number of setup. And the number of setup is 72,120. 72,120 setup. And that will give us 2,928,000 divided by 72,120. Then you have 40.60 per set up. This thing would have been, if the batch size for the second one, if it were 500, it would have been 2,920,000, 928,000 rather, 2,928,000 divided by 7,320. This will have been 400 naira. It will have been 400 naira. That is if the batch size for Betam, if it is 500, this result will have been 400 naira. Take note of that. I want you to solve it on your own. I'm giving you the answer so that you'll be able to compare the result you obtain with what I'm giving you. If you change that batch size for Betam to 500, you will get 400 naira here. Special part handling cost. And the cost driver is number of special parts. Number of special parts was obtained to be 4.8 million. 4.8 million. So 2.4 million divided by 4.8 million. That gives us 0.50 kobo per part. Per part. This is not affected, even if the batch size for Betam, even if it is 500, this result will still be the same. Then the third one is customer invoicing cost. Customer invoicing cost. You use number of invoices, and we got the number that is from working 3. Number of invoices, we got that to be 2,900. So we have 1,160,000 divided by 2,900. That gives us 400 naira per invoice. Per invoice. This is not affected too. It will be the same under both methods. That is, even if the batch size for Betam, even if it is 500, you will still get the 400. Then material handling cost. Material handling cost, you have to use number of batches. And the number of batches obtained. Number of batches obtained. If you add this together, 2,412. 2,412. 2,412. So, you divide it, 2,520,000 divided by 2,412. That gives us 1,044.78 per batch. But if the batch size for Betam, if it is 500, if the batch size for Betam, if it's 500, This will have been 240 plus 12, which is 252. So you have 2,520,000 divided by 252. It will have given us 10,000 naira. Then it will have given us 10,000. That is what you will get. I want you to solve it and compare your result with that. It will have been 10,000 naira per batch. Please do that and compare it. Then we have other overheads. Other overheads, you have to use labor hours. And our budgeted direct labor hour is 5.4 million. So divided by 5.4 million, this is unaffected, even if the batch size for Betam is 500. So the answer will still be the same. 4,320,000 divided by 5.4 million. That gives us 80 naira. 80 kobo, 0.80 per direct labor hours. That is the solution to B1. In the B1, you have to determine the cost driver rate using the ABC approach. You have to compute the overhead rate per unit of each product using the ABC approach. That is the requirement of B2. B2, overhead rate per unit of each product using ABC approach. There are two products involved. We have AFAM and Betam. Then we have AFAM. The first overheads is setup cost. Overheads relating to setup cost. The setup cost, the cost drivers is number of setup. Setup cost, we got 40 naira 60 kobo. And the number of setup given in the question is 10. So we have 10 times 40.60. Remember, the setup is per batch. So the number of batches, the batch size for a farm is 10,000. So divided by 10,000. So that will give us 0.04. While that of Betam, the number of setup per batch is 30. So we have 30 times 40 naira 60 kobo divided by the number of setup is 50. So that will give us 30 times 40.6 divided by 50. That gives us 24 naira 36 kobo. But if the batch size for Betam is 500 instead of 50 given in the question, remember this will have been 400. That means we have 10 times 400. 10 times 400, that will give us 4,000. 4,000 divided by 10,000. This will have been 0.4. This will have been 0.4. That is 40 kobo, 0.4. Why this will have been 30 times 400 divided by 500. This will have been 24. So I want you to solve it and cross-check your answer. This will have been 24. But if it is 50, so the result will still be this and this. Then special part handling cost. Special part handling cost. The cost drivers is number of special parts. For a farm, the special part, the rate special part handling cost, which is 50 kobo per part, is 0.50 per part. How many parts? Special part, number of special parts for a farm is 10. So we have times 10. Remember, the special part is per unit, and this cost is already per unit. So you don't need to divide it by anything. 0.5 times 10, that will be 5 naira. And for betam, 0.5 times the number of special parts is 40 for betam. 0.5 times 40, that will be 20 naira. This is unaffected, even if the batch size for betam is 500. So the cost will still be the same for this one. Then the third item is customer invoicing cost. Customer invoicing cost. Customer invoicing cost. Customer invoicing cost, you have to use the number of invoices. Now, and we got 400 naira per invoice. 400 naira for a farm, we have 400 times the number of sales invoice for a farm is 500 per year times 500. Remember, the cost you have to calculate is per unit, and this is not per unit. So you divided by 120,000 units produced. 400,000 times 500 divided by 120,000. This will be 1.67 kobo. 1.67. This is unaffected, even if the batch size for betam is 500. For betam, we have 400. The rate per unit is 400. The invoice, the customer invoice for a year for betam is 2,400 times 2,400. Since it is not per unit, you divide by number of units of betam, which is 120,000. 400 times 2,400 divided by 120,000. That gives us 8 naira per unit. Then the next cost items is material handling cost. Material handling cost. You are to use number of batches. Material handling cost, and we got 1,044.78. 1,044.78 times the number of batches is 12. For we have 12 batches. Since this is not in per unit, let's divide it by number of units. 120,000. 1,044.78 times 12 divided by 120,000. That gives us 0.110. For betam, we have 1,044.78 multiplied by the batch size for Betam is 2,400. 2,400 divided by 120,000. I ought to have multiplied the batch size by the number of separate material issued per batch, which is 10 for each of the items. So before calculating the material handling cost here, so it will not be this, it will be 104.48, but you will still arrive at the same thing. So that, because I don't want to rub it off, the two methods will lead to the same final answer. So that is why we not alter that again. So we have 1,044.78 times 2,400 divided by 120,000. That gives us 20.90. 20.90. That is for material handling. The last one is other overheads. Other overheads. For other overheads, you are to use labor hours. And we got 0.80 per direct labor hour. For a farm, 0.80 times the labor hours required. Direct labor hours required for a unit of our farm is 20, while that of Betam is 25 as given in the question, times 20 hours. So we have 20 times 0.2, 0.80. 0.8 times 20, that gives us 16 naira. For Betam, we have 0.80 times 25 hours. We got 20 naira. 20.00. So let's sum up those costs. For our farm, we have 0.04 plus 5 plus 1.67 plus 0.10 plus 16. We got 22.81 as the total. 22.81. That is the overhead rate per unit for a farm using ABC. For Betam, 24.36 plus 20 plus 8 plus 20.9 plus 20. We have 93.26. 93.26. That is the solution to B2. Now, let's have the C part of the question. In the C part of the question, if the unit, material and labor cost for the products are as shown below, determine their unit selling prices, where the company adheres to a policy of 20% profit margin using the two overheads absorption method. So we want to you have to calculate the selling price using determine their unit selling prices, calculation of unit selling prices under the two methods. We want to use traditional methods, traditional overheads method, absorption method, and the activity-based costing method. Betam, let's have affirm. That is, if you are using activity-based costing approach, then better affirm. If you are using the traditional costing method. Now, we have the material cost, materials cost. For affirm, we have materials 400. 400 for affirm material 400. That is overheads allocated. Then for betam material 500. Betam 500 for material, 500 for materials. Then we have labor costs. For affirm labor 100, betam 125. Affirm 100, betam 125, 125. Then if you sum them up, you have the total direct cost, total direct cost. This will be 500 for affirm. This will be 625 for betam. This will be 500 for affirm. This is 625. Then overheads, production overheads absorbed. Production overheads absorbed. The production overheads rate attributable to a unit of each product. The one absorbed for affirm 49.50 kobo under the traditional method. 49.40 kobo. 49.40 kobo. For betam 61.75 under the traditional method. 61.75. So addition of that will give you the full cost. Then under the ABC, activity-based costing, that is over figure B2, we got 22.81, and then 93.26. Now, let's sum them up. This will be, the full cost will be 549.4, 625 plus 61.75. You have 686.75. Then this will be 522.81. This will be 625 plus 93.26. Here we have 718.26. Now, we want to determine the selling price, where the companies adheres to a policy of 20% profit margin. This is margin, not markup. Margin is calculated on the selling price. We've not know our selling price, but markup is calculated on the cost. So that means since we've know our full cost, but we've not know the markup, what we are given is the margin. Therefore, you will need, since margin is on sales, margin means sales. Since margin is on sales, that means for it to correlate with cost, we need to convert from margin to markup. Then we now mark up the cost in order to get the selling price. Now let's convert our margin to markup. Since profit margin is 20%, you convert 20% to fraction, it will be 20 over 100. Then you convert it to markup. When you are converting from margin to markup, you subtract the numerator from the denominator. That means you have 100 minus 20. If you are converting from margin to markup, you subtract the numerator from denominator. But if you are converting from markup to margin, you add the numerator to denominator. So we subtracted it because we are converting from margin to markup. This will be 20 over 100 minus 20. That will be 80. Let's take it to percentage times 100. So that means markup will be 20 times 100 divided by 80. That will be 25%. Markup is 25% when margin is 20%. So we add profit markup now. Profit markup. That is 25% of this, of each of these. 25 over 100 times the profit. So what is 25% of 549.4? That gives us 137.35. If you add it to it, let's sum them up. Plus 549.4. We have 686.75. That is the selling price. Selling price. That is for a farm under traditional method. For Betam now, we have 25% of 686.75. What is 25% of that? We have 171.69. 171.69. So now let's sum them up. Plus 686.75. So we have 858.4. 858.44. That is under traditional method. For ABC, 25% of 522.81. So we have 130.70. 130.70. Let's add it to it. Plus 522.81. We have 653.51. 653.51. For Betam, 718.26. 25% of that. That gives us 179.57. 179.57. Now let's add it. Let's add it up. Plus 718.26. That is totaled 897.83. This marked the end of the solution to the question. Please, your like and comment will help this video to reach a large number of people. Thanks for watching ZICA.